from Simple Stocks, and welcome to the weekly sector review coming up shortly. Let's look at the XBI. As you can see, we're approaching this neckline here at 65.61. Another bad week. These are weekly candles. Another bad week for the XBI. We talked about it last week, about testing this next neckline here, looking for some type of reversal, which apparently never came. The next level that I see of support, which I probably would have mentioned before prior to this candle, would be 53. We would look for this candle to hold. They have to hold this level 62.41. If they don't hold this level, they're going to challenge the 56 level, and then from there you can look for some type of short-term bounce area. Right now, resistance would be, anywhere, if we go on the 4-hour, anywhere here, any of these lower highs, specifically 71 would be a lot of resistance. Even 67.30 would be a lot of resistance here in the XBI. But it's already lost this area. If there's going to be anything, it's going to be a slight bounce. And like I said, 67.40, 67.30 is an area of resistance. Even this area, 66, is an area of resistance as well. I just love to see it get over 66.70 here, right here. Then there's a possibility of candle close above that area. It could be buyer rejection of this zone. Save this zone for another time. XLB, let's go to the weekly on the XLB. This is the materials sector. This was pretty bad closing here below this wick of 74.70. The good news is that there is support in this area here, 71, specifically this area from 71 down to 68. There's definitely support in this area. So it's a little heavy here, meaning there's some liquidity here that was taken. Resistance would be about 79, 80 bucks to round it off. But I would expect support in the $70 area here. But this was not good that it closed below. So this candle here. The good news is that it's shallow enough, this retracement, where we shouldn't get that heavy of a drop off. Whatever, if it comes down, this would be an interesting a sector to look at for a reversal. But right now, there's no entry point here for the XLB. XLC, we talked about last time about coming back into this area here, 60 bucks. This would be definitely an area that I would be looking in. To 57, 58 to 60 bucks would be an area. Once again, you can see we broke this level here of 64.39. Resistance at 66. It looks weak. There could be a bounce, but I believe that bounce would be sold to 66. I think honestly we're looking at a retracement here, a 38 retracement from this area to this area, from this high to this low. Second. Oh, my Fibonacci's is not working. Yeah. So you can see where the 38 retracement is here at 60. It doesn't mean it has to stop here, but it allows for the machines to take profit, and I think that's what they're doing. I think they're taking profit here. So once again, 60 to 58, look for a bounce. Anywhere up towards 66.50, I think you're going to have sellers there. Energy, nice rejection here on the weekly. Nice rejection here. You got that kind of bearish setup with a doji at the top. Not that I'm a candle guy, but sometimes they do tell a story, and then a full body of sellers here. So obviously there was a rejection here. They may be coming back to retest this area here, which is 78 to 80 bucks. It doesn't mean that it's over. It just means that this level of 93 is something that is being rejected. We got to get over 93. Not we, but it has to get over 93. They may be trapping traders with some type of trend line liquidity here to come into this zone. So I would look for some type of reversal here. And you can see how that looks on the 4-hour. It just looks like they're consolidating this range again, even if they come into here. So with this kind of shape, I would be looking to... It looks like they're creating a channel here, to be honest with you. It looks like they're creating some type of channel, which can be used as later as a potential breakout. Okay, so I think that's what's kind of going on here on the XLE. XLF, this is a good one to talk about. You know, a lot of the bank stocks are really, really struggling. What I can tell you about the XLF is this. I can tell you that 35 is resistance, and that 30 has to hold as support. If they lose 30, it's big trouble. If they even lose this 3130 level, is big trouble. If they close a 4-hour candle below 3130, I mean, I think there's a good possibility that they create this type of formation here, this bearish M pattern coming back down into these levels of support. 27, okay, then maybe something like this, and then back down. That's the danger of not holding these levels here. And I think 3130 is going to be a sign, of an issue. Right now, resistance would be 33.5. Resistance would even be 32, the low 32s. So it looks like they want to fill this gap down in this area, and that would be fine. But they need to hold. You see this level right here? They need to hold this level here, 3130. They need to at least bounce it here, reject it. See if we can get over 3230. Maybe they consolidate sideways for a little bit. All right. XLI. XLI on the weekly. Again, this has a nice looking chart. Remember we talked about this breakout here? So it's obviously coming in a little bit deeper. It's coming in for a little bit of a deeper retracement. 95 is a big level. 95 is a big level. Resistance at 101. Okay, if it loses this level, I would expect it to possibly come down and after some type of pullbacks, get down into this $87 area. So right now, even if it's consolidating here, it's not so bad. So let's say it's consolidating between here and between this zone. It's not necessarily the worst thing in the world for the XLI. There's still potential for the XLI. I think the XLI does want to retest this area at some point, but they may want to come down with the market weakness with the volatility so high. Take advantage of that and find orders sitting in this area here of 85 to 86. So I would look for a short-term bounce off 95 with resistance back at 101. XLK, the technology sector, this is a lot like the XLC. You know, we had talked about it coming back, taking some profit. So you could see here where 155 is it's not really a significant level, as you can see. So maybe there would be a little bit of a deeper retracement. I would definitely look for support in this area right here at 150 to 151. You know, this is just, it looks like, to be honest, it looks like it's just bull flagging. It just looks like a real sloppy bull flag. Might look better on the 4 hour. It's actually not sloppy. So just like the other sector, the XLE, I think it's just creating a channel as they try to get down into, you know, as they try to get down into this zone here. So this is kind of what I'm looking at. There is a gap here. There's actually a gap here at 158 that should be support. I think there'll be one more bounce off of 158 into resistance towards 165 before they even try to come to this gap. I think this gap will be defended because it's such a bullish move. It's still such a bullish move. Think about it. We have not even retraced 38% of this low. That's pretty impressive. This feels awful, but we haven't even come back to 50% of this move. I mean, people just expected it just to keep going up, up, up without some type of computer taking profit, right? XLP to staples, this is not good here. This is definitely not good here, but you can see on the weekly they're holding the 66 level. You know, maybe they dip further this week into this area here, 65, before they bounce, okay? But they break this area here would be very, very bearish. Would be very, very bearish because now you've broken this leg here of an M-shaped pattern, which could eventually lead to lower prices down the road. But to answer your question for this week, I think there's going to be some support definitely in this area. All right, so let's see if we can hold this 66 level and try and bounce up and get past this 68 level. If we can get above 68.55, we can potentially start getting momentum and moving our way back up to the upside. Real estate we talked about last time. That was a really bad looking chart. And if I remember, we were talking about a $30 level. This has already confirmed pattern lower here. So let's see what we got. Bear with me. This mouse is acting funny. All right, here we go. So we do have this pattern here. It's a harmonic pattern, and it's suggesting that we're going to come into this area here. So any pop here would be a short. Okay, so if we come back into the 34.50 area before we hit the $30 area, I would be shorting this higher lows. Okay, if I was short here, I wouldn't get stopped out. I would be able to add a short at 36. Sometimes they want to go a little bit higher to distribute out, and they drop lower. But this is a pretty clean pattern. So there's a lot of room to go to the upside before they fake out and then drop to the bottom. That's if the market can rally this week. But this is very bearish, very, very bearish for many, many reasons. XLU, this was actually a pretty decent wick here on the weekly. You can see these buyers here at this level, 55. I think we noted that level. 62, 63 is going to be resistance. There may be lower coming, but yeah, look at that. Look at that perfect fib level. So it could be in rally mode. It could be in sideways mode. If you're currently long the XLU, look for this level of 57 to hold. Okay, this level of 57 to hold, and I think they need to just consolidate a little bit here, maybe even pull back one more time, but see if they can maintain this structure 57. Okay, they just broke out of this zone, so if we can get a reversal in a smaller time frame here, there really is none. 59 would be resistance, 60 would be resistance. So I'd look for a little bit of a bounce here potentially on the XLU. But at most it's going to run into resistance in this area. Okay, but I'd definitely be looking to dip buy if I saw a 15-minute reversal at the 57 area. But there's nothing here that's exciting on the XLU. XLV, the healthcare sector. Now this one here is bearish, and you could see here they lost this support at 123.63. But I still say it's still between this 119 zone and between the 141 zone. This is just the channel. I think once we get close to this area here, this channel will, there'll be a rejection of trying to break this low. It's only 1, 2. This will be a third touch in this area. There could be a bounce in the XLV sector. That may be one sector you may want to look at that could potentially, gain a little bit of steam going into if the market does start to just turn around a little bit. You can see here how bearish this is. We broke this level. But typically what happens is once you break a level, they'll retrace it. So we're kind of in an area where we know about the 121 to 120 area. We really don't want to be jumping in. Let me see on the 15-minute if there's any reversal. There is absolutely no reversal here. This is just an absolute free fall. So I think I'd be interested more in this 120, 121 area. Maybe as we get to this area, we see some type of, rejection of price back up into this area. That's at best what I'd be looking for at an XLV at this point. Okay. The XLY. Finally, the XLY. This is the consumer discretionary. Again, this is pretty decent. It's got a pretty decent chart here. There is support here at. This candle right here, 138 to 147. Obviously, you can see there's an M-shaped pattern here, which would be bullish when it completes. Let's take a look at the 4-hour. Yeah, so the 4-hour 154 is resistance. You can see we're coming into a whole bunch of support here, but I wouldn't go long until we get some type of reversal in this zone. 147. It's a pretty big zone. There's even gap here at 142. So they may be coming back to clean up for this area here. Let's look at the 15 minutes, something we could trade now. Just making lower lows and lower. You can see the rejection here. We want to see at least 147.90 hold. If 147.90, there could be buyers here for a quick bounce off here, with resistance being at 151. But it seems like it definitely wants to come into this 147 area. All right, traders, thank you. Thank you for showing up. And we will see you next Sunday. Bye-bye.